Welcome back. Small business at their breaking point. The second round of the Paycheck Protection Program allocating $175 billion to save America's small businesses. But it comes amid some hiccups. After the initial funds ran dry, critics questioned if lenders' priorities were in check, and several large universities and corporations collected loans before those struggling most. Joining me right now over the phone is the U.S. Treasury Secretary Steven Mnuchin. Secretary Mnuchin, it's always a pleasure to have you. Thank you for being here.
Thank you. It's great to be with you, Maria.
So, Secretary, give us a status check on the Paycheck program. Is all of the money for the second tranche committed yet, or where are we in terms of the money having gone out?
No, it's not committed yet. There's $175 billion of the $310 billion that's been used, and all the systems have been caught up. We couldn't be more pleased. In this round, there's 2.2 million loans already done at an average loan size of $79,000. So we're really seeing this is going directly to small businesses. And just to put this in perspective, the previous round, we did 1.7 million loans. So we're already way over that level. And despite there were some hiccups with the systems, I think, as you know, this is more capacity than the SBA has done probably in its entire history at this point. And now the systems are up and running, and this will impact about 60 million people by the time this round is concluded. So 60 million more people will be back to work and small businesses being able to open.
This is really important, a great number there, and thanks for doing all that you're doing, Secretary. Let me ask you, because Wall Street has some questions, and they say that there are questions on Capitol Hill about whether businesses should have more flexibility in this plan. I know that with this program, the requirement is that 75% of the money, the loan, goes out to your employees so that employees get that money, and then you use 25% of the money to pay other things like your rent and business expenses. People want that loosened. Are you willing to look at this again and loosen those requirements? They believe that will lead to an expansion of this program.
Well, Maria, as you know, this program had enormous bipartisan support and was designed with everybody at the table. And really the purpose of this was to get workers back to work. And every dollar we spend here is a dollar we save on unemployment insurance. So the program is pretty simple. You get 2 months of payment for your workers, and you get an extra 25% for your overhead. And to the extent you hire back your workers, you get that all forgiven. So the idea is that taxpayers would forgive the majority of the money that was going to the workers, which saves unemployment, and a reasonable amount of overhead. I think 25% overhead is very fair. But this was not designed as a loan. It was really designed as a grant. And people who say, you know, they want to use more money for overhead, they can go out and borrow an EIDL loan. So there's another program that will have about $350 billion to small businesses of 30-year loans. Those loans aren't forgiven, but that's a lot of money that small businesses can borrow so that they have overhead. So these two programs combined will be $1 trillion.
That's huge. It's huge. It's an enormous number. I get that, and you're doing a good job helping small business and, importantly, employees. But what I'm asking you is the PPP program and the 75% and the 25% breakdown and the 8-week period. Because as we've talked about from the very first time you launched this program, I questioned this, and I asked you because if you are a restaurant and you are paying out 75% of the money to your employees and you're still in the middle of a shutdown, you don't have any business, you're still not going to save your business. So maybe my employees are okay, they got the money, but I'm still going to go bankrupt. So the question is, are you willing to look at those numbers and loosen them up? Can an employee take the money and maybe pay it back in 10 weeks instead of 8 weeks?
Well, Maria, unfortunately,
send the money out in 10 weeks instead of 8 weeks, rather.
This is the way the program was designed by Congress, and we think it has the right intent to get the money to employees. So I don't have the flexibility to change that. But let me just say, you know, there are certain cases where businesses will have issues. But let's focus on the bigger picture, 60 million workers. So some of those may be restaurants that can't open. A lot of those are restaurants that are ready to open, and also restaurants that will do a lot of takeout business. So I can tell you the number of stories I've personally seen from small businesses, people thanking us, people sending letters. We saw the small businesses come in and meet with the president. I mean, this is really a great success story and is just enormously helpful to get businesses back open as the economy opens.
Yeah, I'm not saying it's not a success story. I'm just saying that small businesses like restaurants do not feel that it's a success story for them. They say that the 8-week period is too stringent and the 75-25 makeup. But I understand it's Congress. They've got to look at it. I'm just wondering if you feel that that would expand the program if you were to move that.
Maria, I think the president is very sympathetic to the restaurant industry. They've been particularly hard hit. He's focusing on getting tax changes so that will be fully tax deductible like it used to be, different incentives to get people to go back to restaurants. So we fully appreciate the issues of the restaurant industry in particular have been hardest hit. The president's also looking about ways to stimulate travel. Again, we want people to travel safely, to be able to visit places safely. So as the economy opens up, I think you'll see demand coming back.
Do you think international travel will be opened up this year?
Too hard to tell at this point, Maria. I hope down the road it is, but I'd say we're taking this. Our priority is opening up the domestic economy. Obviously, for business people that do need to travel, there will be travel on a limited basis. But this is a great time for people to explore America. A lot of people haven't seen many parts of America. I wish I could get back on the road soon. So we're looking to all get back to business.
Secretary, one senator is saying that the IRS's interpretation of the PPP plan was not the intention of the program. He's calling for the issue to be fixed immediately, and that is that the IRS on Thursday released guidance stating that the expenses related to forgivable loans through the Paycheck Protection Program will not be tax deductible. Are you going to change that?
Well, Maria, that's just the guidance is correct, and that person's just wrong. So let me explain why. Specifically, the money coming in the PPP is not taxable. So if the money that's coming is not taxable, you can't double dip. You can't say you're going to get deductions for workers that you didn't pay for, that taxpayers didn't pay for. So this is just saying no double dipping. And again, if the PPP grants were taxable, then you'd get to have the deduction. But this is just a simple offset. I've reviewed this personally. This is basically tax 101. It's a simple rule.
What are you expecting from the openings this week? We've got 23 states beginning the reopening of the economy, Secretary. That's 35% of the GDP. Tell us what you're expecting in the next couple of weeks as we do have this slow but steady opening for the economy.
Well, I think it's important we have a slow and steady. Some places will be faster. Some places will be slower. I think, as you know, that this was no fault of business. This wasn't anybody making bad decisions. This was all about a virus that we're going to kill. And by the way, I'm extremely optimistic, as the president has said, about getting a vaccine by the end of this year. I've seen some terrific companies making great progress on this. But as the economy opens slowly, we're going to see, obviously, a difficult second quarter. We'll see things better in the third quarter, better in the fourth quarter. And as the president said, we'll be back to a great economy next year.
And in doing that, as we do see these openings, some states are having a harder time than others. Some states want lawmakers to make them whole. So lawmakers are clashing over the next round of coronavirus stimulus, or a relief package, if you will. Democrats are calling for significantly more money to help states and local governments. But Republicans are pushing back, urging Congress to wait and see how the economy reacts to funding that's already in place. Where do you stand on this? I had New York City Mayor Bill de Blasio on the show a couple of weeks ago, and he said, look, I need $7.5 billion right now. We need to make New York City whole. Are you going to do it?
Well, let me first say, working with Congress, we were able to get now $3 trillion that we're pumping into the economy, and that's money that's going into the economy now. It's beginning to get in. As it relates to states, as part of this, there was $150 billion that went to states. That's a lot of money for coronavirus expenses. The president directed me on Friday to create more flexibility so that that money can be used, and we send out guidelines for firefighters, policemen, first responders, so there should be no issues with states being able to pay those people. And as we've said before, we're not going to bail out states that had financial issues ahead of time. we will look at helping states as we've done, and we've also set up with the Federal Reserve a lending facility for cities and states.
So is it fair to say that given the unemployment benefit expansion expires July 31st, maybe a phase 4 timeframe would be in June? Is that what you're working on?
Well, we're beginning to have conversations on a bipartisan basis. We're going through the issues. We're going to have very detailed discussions. I think everything we've done has been with overwhelming bipartisan support. We've put $3 trillion out. If we need to put more money out to support American business and American workers, the president's absolutely prepared to do that. But now that we put out $3 trillion, we're going to look at very carefully how we go back. And we're going to also take into account what the economic impact is as we open up the economy.
Secretary, were you surprised at what Boeing did last week? Big debt raise. Of course, the company going from likely needing government support to now tapping the debt market in a huge way, $25–30 billion. We've talked about this before, that Boeing pushed back on your commentary that perhaps the government would take a stake, a warrant similar to what you did with airlines.
Well, it wasn't a surprise to me, Maria, because I was in touch with Boeing pretty much on a weekly basis. I think, Boeing is a major employer, a major exporter. I speak to many, many CEOs weekly to keep on top of what's going on. I think this was really a great success story. So if you saw the day we announced with the Federal Reserve that we were going to do a facility for the primary markets and the secondary markets in corporate bonds, and that was going to include fallen angels, that was the day that the corporate bond markets reopened. And you've literally had record issuance of investment-grade bonds. So I couldn't be more pleased. This was a great success story. They didn't need a penny of government support. They thought that they were going to need government support. They raised $25 billion in the capital markets. So this really worked out perfectly. Just our announcement with the Fed, without putting a dollar, opened up the markets, and the markets are functioning normally. But we are there for companies that can't access the markets for specific scenarios.
The president has said that he wants to keep China accountable for some of the behavior that we've seen around this COVID-19 pandemic, given the fact that they downplayed it. The president suggested removing sovereign immunity that shields lawsuits against the Chinese Communist Party. Are you considering this? And what about limiting or removing shares of Chinese stocks and bonds in indices? I know that the president also discussed the thrift fund, which, of course, the U.S. federal pension fund wants to invest in Chinese companies. Many of those companies are making equipment for the Chinese military.
Well, the president is reviewing all these issues very, very carefully. And as he said, he's not happy that they didn't let people in earlier to study this, to know what was going on. He's been very clear. He's working with the intel agencies to understand what they knew and what they didn't know. The president's number one focus right now is the health of the American public and the U.S. economy, but he is studying the China issue very carefully.
And Secretary, after all of this, is there any way that the Chinese are actually going to keep to their promise of buying the $250 billion worth of goods? Are you expecting them to renege?
No, I'm expecting them to meet their obligations. This was a deal that was negotiated over a long period of time. It was signed off on by President Xi and President Trump, and I have every reason to expect that they honor this agreement. And if they don't, there would be very significant consequences in the relationship and in the global economy as to how people would do business with them.
And Secretary, real quick before you go, the oil companies, is a financial aid package coming there?
No bailout to the oil companies. What we've said is we are looking at the oil companies as we're looking at other things to study this. There are important issues. The president wants us, and we will remain energy independent. And let me just say, this is the classic supply-demand imbalance for oil. So, like other physical commodities, there's just not a lot of room to store this. So there's no question in my mind that down the road, oil will rebound. And this is a great opportunity. We're working with Secretary of Energy to fill up the strategic reserve. I mean, he's cut some amazing deals where literally he's getting free oil for paying for storage. So I know he's looking for more storage capacity, and the president is determined. We will work with the Department of Energy to support our industry.
Secretary, thank you so much for being here. Appreciate it very much. Secretary Steven Mnuchin.